Welcome to Lesson 2 of Week 13, focusing on grant setup. This lesson covers how to establish restricted accounts and segregate grant funds from other organizational resources. Proper grant setup creates the foundation for financial compliance throughout your award period. Before you spend a single dollar of grant funds, you must establish appropriate financial infrastructure. This infrastructure ensures that grant funds are tracked separately, spent only on authorized purposes, and accounted for accurately. Poor setup leads to co-mingling of funds, difficulty demonstrating compliance, and potential audit findings. Many grant compliance problems stem not from intentional misconduct, but from inadequate systems that make it difficult to track and manage grant resources properly. Investing time in proper setup prevents problems that are much harder to fix later. This lesson teaches you how to establish restricted accounts, segregate funds appropriately, set up tracking systems, and create the documentation infrastructure you will need throughout the grant period. By the end, you will understand how to create financial systems that support rather than undermine compliance. Understanding why fund segregation matters helps you appreciate its importance. Segregation is not bureaucratic paperwork, it is fundamental to grant compliance. Compliance requirements under 2 CFR 200 mandate that grant recipients maintain financial management systems providing accurate, current, and complete disclosure of financial results. This includes the ability to identify the source and application of funds for federally funded activities. Segregation enables this required accountability. Audit trail creation through segregation enables demonstration of proper fund use. When auditors examine your grant, they want to see that every dollar was spent appropriately. Clear segregation makes it easy to trace funds from receipt through expenditure. Poor segregation creates confusion that auditors interpret as lack of control. Error prevention is a practical benefit of segregation. When grant funds are clearly separated from other resources, staff are less likely to accidentally charge inappropriate costs to the grant. The physical and accounting separation creates natural checkpoints that catch errors before they become compliance problems. Transparency through segregation shows exactly how grant funds were spent. Funders, auditors, and your own organization can see the complete picture of grant activity. This transparency builds confidence in your grant management and supports accountability to all stakeholders. Restricted accounts are the primary mechanism for segregating grant funds. Understanding how they work enables proper setup. A restricted account is dedicated solely to funds from a specific grant. No other funds are deposited into this account, and no expenditures unrelated to the grant are charged to it. This dedication creates clear boundaries around grant resources. Separate tracking distinguishes grant funds from general operating funds. Your organization likely has multiple funding sources. Restricted accounts ensure that federal grant funds are not mixed with state funds, private donations, or general operating revenue. This separation is essential for demonstrating that federal funds were used only for federal purposes. Access controls limit who can authorize charges to the restricted account. Not everyone in your organization should be able to spend grant funds. Restricted accounts enable you to designate specific individuals who can authorize expenditures. This control prevents unauthorized spending and supports separation of duties. Reporting capability allows easy generation of grant-specific financial reports. When you need to prepare an SF 425 or respond to an audit, your restricted account provides the data. Account-level reporting shows all receipts and expenditures related to your grant without manual sorting. Setting up restricted accounts involves several technical steps. Following this process ensures your accounts are properly configured. Chart of accounts entry creates new account codes specifically for your grant. Work with your finance department to establish codes that identify this grant distinctly. Many organizations use a combination of grant number, funder identifier, and cost category codes. Consistent coding across your organization enables accurate reporting. Budget loading enters your approved budget into the financial system. Input each budget category with its approved amount. This loading enables budget to actual comparison throughout the grant period. You should be able to see at any time how much was budgeted, how much has been spent, and how much remains in each category. Access configuration sets up authorization for account users. Identify who needs access to the account and at what level. Some individuals may only view balances, others may initiate transactions, still others may approve expenditures. Configure these permissions to match your internal control requirements. Testing verifies the account functions correctly before you use it for actual transactions. Process a test transaction and confirm it posts correctly, generate test reports and verify they display expected information, catch configuration problems during testing rather than during actual grant operations. Your financial system should track expenditures by budget category. This category-level tracking supports compliance and reporting. Personnel costs include salaries and wages for staff working on the grant. Track these by individual if possible, showing hours worked and salary charged. Personnel often represents the largest budget category and receives significant scrutiny. Clear tracking of who worked on the grant and how much they were paid is essential. Fringe benefits are associated benefit costs for grant-funded personnel. These include items like health insurance, retirement contributions, and payroll taxes. Fringe is typically calculated as a percentage of salary. Track fringe costs linked to the personnel costs that generate them. Supplies and materials are consumable items used for project activities. These might include office supplies, laboratory materials, curriculum materials, or other items consumed during the project. Track these costs by type or purpose to demonstrate their connection to grant activities. Equipment represents capital items with useful life beyond the grant period. Federal grants typically define equipment as items costing more than $5,000 with useful life exceeding 1 year. Equipment requires special tracking and disposition procedures. Travel costs support project-related travel by grant-funded personnel. Track travel by trip, showing purpose, destination, and costs. Travel is frequently questioned in audits. Clear documentation prevents problems. If your grant requires cost sharing or matching, you need systems to track these contributions. Cost sharing has its own compliance requirements. Matching requirements exist when your award requires you to contribute resources beyond the federal share. Your NOA specifies any matching requirement, typically as a percentage or dollar amount. If you committed to cost sharing in your proposal, you must deliver and document those contributions. Tracking obligations means documenting your matching contributions throughout the grant period. Set up accounts or tracking systems specifically for cost sharing. You must be able to demonstrate that you contributed the required match and that contributions met applicable requirements. Valuation methods determine how to value in-kind contributions. When you contribute staff time, space, or other non-cash resources as match, you must value them appropriately. 2 CFR 200 provides guidance on valuation. Document how you calculated the value of each in-kind contribution. Reporting requirements mean demonstrating match compliance in your financial reports. Your SF 425 includes sections for recipient share of expenditures. You must report cost sharing alongside federal expenditures. Systems that track match separately make this reporting straightforward. The Grant Binder is a documentation system that organizes all materials related to your grant. This system supports compliance and audit readiness. A central repository keeps all grant documentation in one location. Whether physical binders or electronic folders, you should be able to find any grant-related document quickly. When auditors or funders request documentation, you can provide it promptly. Scattered documentation creates delays and suggests disorganization. Award documents include your NOA, any amendments, in correspondence with the funder. Keep the original NOA and all subsequent modifications together. Save emails and letters about your award. This documentation history shows what you were required to do and what guidance you received. Financial records include your approved budget, expenditure reports, bank statements, and reconciliations. Maintain documentation showing what you spent, when you spent it, and that amounts match across different records. Financial documentation is the first thing auditors examine. Program documentation includes progress reports, deliverables you produced, and evidence of activities conducted. If you claim to serve 100 participants, keep attendance records. If you produced curriculum materials, keep copies. Program documentation proves you did what you said you would do with grant funds. Document retention requirements specify how long you must keep grant records. Understanding these requirements prevents premature destruction and ensures compliance. The standard retention period is 3 years after you submit your final financial report for the grant. This timeline is specified in 2 CFR 200.334. During this period, you must maintain all grant-related documentation and make it available if requested. Extended retention applies when disputes, audits, or litigation are pending. If any action involving your grant records has not been resolved, you must retain records until resolution regardless of the 3-year period. Do not destroy any records if you have reason to believe they may be needed for ongoing matters. Electronic records must meet the same standards as paper records. If you maintain grant documentation electronically, ensure your systems provide authentic, reliable, and accessible records. Electronic records must be readable throughout the retention period. Consider format obsolescence when planning long-term retention. Destruction protocols govern how to dispose of records when the retention period ends. Destruction should be documented and complete. Sensitive information should be destroyed securely. Some organizations establish annual destruction schedules, others destroy records grant by grant as retention periods expire. Banking and cash management for grants involve specific requirements. Understanding these requirements prevents compliance problems with fund handling. Dedicated bank accounts may be required or advisable for federal grants. Some funders require separate bank accounts for their funds. Even when not required, separate accounts simplify tracking and prevent co-mingling. Consult your NOA for specific banking requirements. Drawdown procedures govern how you request federal funds. Most federal grants use payment management systems where you request reimbursement for expenditures or advances for anticipated needs. Understanding your specific drawdown system and following proper procedures ensures timely access to funds. Cash on hand limits require minimizing federal cash in your possession. 2 CFR 200 requires that you maintain advance payments in interest-bearing accounts and limit cash on hand to the minimum needed for immediate disbursement. Drawing down funds far in advance of need violates federal requirements. Interest requirements address earnings on federal funds. If you earn interest on federal funds held in interest-bearing accounts, you may be required to remit that interest to the federal government. Requirements vary based on the amount of interest earned. Understand the interest rules applicable to your grant. If your grant involves subrecipients, you have specific setup and monitoring obligations. Understanding these requirements is essential if you pass grant funds through to other organizations. Subrecipient identification distinguishes subrecipients from contractors. Subrecipients carry out part of your grant substantive program. Contractors provide goods or services for your own use. The distinction matters because different rules apply. Incorrectly classifying a relationship can lead to compliance problems. Subaward agreements must include required elements specified in 2 CFR 200.332. These include the federal award information, applicable compliance requirements, indirect cost rate provisions, and audit requirements. Your subaward agreement passes through applicable requirements from your own NOA. Monitoring requirements mean you must oversee your subrecipients. As a pass-through entity, you are responsible for ensuring subrecipients comply with grant requirements. Monitoring includes reviewing financial and programmatic reports, following up on audit findings, and taking action when problems arise. Risk assessment evaluates subrecipient capacity before making subawards. Consider the subrecipient's experience, internal controls, and prior audit results. Higher-risk subrecipients require more intensive monitoring. Document your risk assessment and monitoring approach for each subrecipient. Equipment purchased with grant funds requires property management systems. Setting up these systems at grant start prevents problems later. Equipment inventory systems track grant-funded equipment throughout its life. Your inventory should include item descriptions, acquisition dates, costs, locations, and condition. This information supports reporting requirements and demonstrates proper stewardship of federal property. Tagging procedures physically identify grant property. Equipment purchased with federal funds should be labeled or tagged to show its funding source. This tagging prevents equipment from being used for unauthorized purposes and helps with physical inventory verification. Use restrictions limit equipment use to grant purposes. Equipment purchased for a specific grant should generally be used for that grant's activities. Using grant equipment for non-grant purposes can be problematic. Document your policies for ensuring appropriate equipment use. Disposition planning prepares for decisions about equipment at grant end. Federal equipment rules specify what happens to property when grants close. Depending on value and federal interest, you may need to request disposition instructions from the funder. Understanding disposition requirements in advance prevents surprises at closeout. Personnel costs require robust systems for documentation and tracking. Since personnel is often the largest budget category, these systems deserve careful attention. Position documentation maintains records of grant-funded positions. Document job descriptions, salary rates, and percentage of time committed to the grant. This documentation supports the personnel costs charged and demonstrates appropriate allocation. Time tracking systems capture how staff spend their time. 2 CFR 200 requires that salary charges be based on records that accurately reflect the work performed. Time and effort tracking supports effort certification required for many federal grants. Set up systems that capture actual time worked on grant activities. Payroll integration connects time records to actual pay. Your payroll system should charge salaries to appropriate accounts based on documented time worked. Manual allocation after the fact is less reliable than real-time integration. Ensure your systems connect time tracking to payroll processing. Benefit allocation properly charges fringe benefits to grants. Benefits should be allocated based on the same basis as salaries. If an employee works 50% on a grant, 50% of their benefits should be charged to the grant. Set up benefit charging to follow salary allocations automatically. Internal control systems protect grant funds and ensure compliance. Establishing these systems at grant setup prevents problems throughout the award period. Separation of duties means different people perform different functions. The person who initiates a purchase should not be the same person who approves it. The person who handles cash should not be the same person who reconciles accounts. Separation creates checks that catch errors and prevent fraud. Approval hierarchies define who can authorize what. Establish dollar thresholds for different approval levels. Small purchases might require supervisor approval. Larger purchases might require director approval. Clear hierarchies prevent unauthorized expenditures. Review procedures mean regularly checking transactions and accounts. Monthly reconciliation of grant accounts catches errors while they can still be corrected. Periodic transaction review ensures charges are appropriate. Regular review is more effective than end-of-year examination. Documentation standards define requirements for supporting evidence. Every expenditure should have documentation proving it was appropriate and properly approved. Establish standards for what documentation is required for different types of transactions. Consistent documentation supports audit readiness. Technology systems support grant management. Evaluating your technology capabilities during setup identifies gaps that need addressing. Financial software must have capabilities needed for grant tracking. Can your system track multiple funding sources separately? Can it generate grant-specific reports? Can it handle required budget categories? If your existing software lacks needed capabilities, consider upgrades or workarounds before grant activities begin. Document management systems enable electronic storage and retrieval of grant documentation. Electronic systems can be more efficient than paper, but they must meet federal requirements for authenticity and accessibility. Evaluate whether your document management supports the grant binder approach. Reporting tools generate required reports efficiently. Consider whether your systems can produce SF 425 financial reports, progress reports in required formats, and internal management reports. Reporting that requires extensive manual compilation is prone to errors and delays. Security measures protect grant data and systems. Financial and personnel data require appropriate protection. Access controls should limit who can view and modify grant information. Backup systems should protect against data loss. Security is both a compliance requirement and good practice. Let us summarize the key points from this lesson on grant setup. Proper setup creates the foundation for compliance throughout your award period. The systems you establish at the beginning determine whether grant management will be smooth or problematic. Investing time in thorough setup prevents problems that are much harder to fix after grant activities begin. Essential systems include restricted accounts for tracking grant funds separately, a grant binder system for organizing all documentation, and internal controls for protecting funds and ensuring proper procedures. These systems work together to support compliance. Weakness in any area creates vulnerability. Critical timing means setting up these systems before you spend any grant funds. Once you begin incurring costs, you need systems in place to track them properly. Costs incurred before systems are ready may not be documented adequately, creating future audit problems. Complete your setup before beginning grant activities. In our next lesson, we cover internal controls and fraud prevention. You will learn how to design control systems that prevent both intentional misconduct and unintentional errors. Internal controls are your primary defense against compliance problems. Practice exercise. Using your current or most recent grant, evaluate your setup systems. Do you have restricted accounts? Is your grant binder complete? Are internal controls documented and functioning? Identify any gaps and develop plans to address them.